Welcome back to this lesson. In this lesson, we'll be discussing about the fair value gap. So, in short, a FVG. So, a fair value gap is an price inefficiency, or we can say it's also an imbalance. And generally, it's when we have, for example, like 3 candles, and these candles, they leave a gap or a price that shows inefficiency. So, for example, or let's assume that these three candles. So, in the fair value gap, these 3 candles should be consecutive to one another. They have to be following one another, and assume that this is a candle or a candlestick. And for smart money concepts, the fair value gap helps us to identify areas of support and resistance in price, and it helps us in price action. So when you have, for example, I've said, let us assume that these three are candlesticks. And so when we have this candle, the first one forms and overlaps with this, the second and the third. Okay, the second, and then also the second overlaps with the third, leaving an imbalance, leaving a space, let me say a gap, an imbalance, a void. No, it's not a void. Let me say an imbalance. That then this space, or this is what we term it as an imbalance. And generally, what the market does is that it may come to rebalance immediately or later in future. It's not a must that it comes immediately, but it may come later in future. So for you as a trader, you're supposed to, for this is an exercise, you to go back into your charts and identify fair value gaps and look at the time or when that these fair value gaps are rebalanced. So let's look at an example, but also you look at your own examples later on. So we can see that there are many. In this instance, this is the dollar index. And in the dollar index, we have, in this price range, we have, I can say, multiple imbalances. So let me highlight and let me show you that this fair value gap, this as the fair value gap, it has not yet been filled. So the fair value gap may stay open like that. It's not a must for it to be immediately rebalanced. So what I wanted for you to study is previous data when an example of this fair value gap, so when it takes maybe even months for the market to come and rebalance. You can see like this is already 23 days, more than let me say a month plus. So but it has not yet be rebalanced immediately. But we get, oh yeah, I can see that there's this one which was rebalanced immediately, like some days after. So a fair value gap is when we have, like here, we have the first candle which overlaps with the second candle overlaps with the first one, and also the third overlaps with the second, and then it leaves an imbalance. Then the market may move further away, or in this instance we see that the market, after immediately forming the fair value gap, it comes immediately and retest. So for smart money concepts, the fair value gap acts as in price action, it acts as either a support. So we can see here that the market retested, found support, then continued further higher. So it may act as a support or resistance. There are instances in which you'll find that the fair value gap may act as a resistance or as a support. Let us look at another example. So I'm looking at a place where, yeah, so we have this example here. We have this candle, we have this down close candle, then the next one had we moved further away, then we formed a fair value gap. So as I said, it's not a must for the fourth candle to immediately come back down to retest. It may be even the fifth or later on in time. So like this one, we got the third, the fourth, the fifth. The fifth retested, then moved away. So we can see that here price acted as a support. It pushed market further away from this point, and we moved higher. Then also another thing I wanted to show you is that later on the same fair value gap was also retested, and it acted as a resistance. So immediately when we closed below this fair value gap, we can see that we got a close below. So what we did is the next candle we had a retest, and then again here also we had a retest, and to the middle point of this fair value gap. So that is where we use this money concept of fair value gap for support and resistance in our trading. You can see even here we also got a touch of the fair value gap, of this fair value gap. That's it for this lesson. So the exercise that you're going to do is go and highlight areas that you found a fair value gap and areas in which that fair value gap has acted as both either a support or both support or resistance. So even here we have this other example. You can see that immediately market rose higher. We came, retested the middle point of it, moved away, came back again, filled it, moved back to the high of it, then drove lower, then up again. It did a lot of things. So another thing you can ask yourself is, when does the fair value gap expire? So that is it for this lesson. See you in the next one.